Hello and welcome. You're tuned into CNBC TV18 Prime. Let's get cracking on a brand new edition of The Big C. I'm Manisha Gupta, back with your daily dose of commodities, cryptos and currencies. A quick read-through, first of all, of the global markets, where we have seen indices notch a fresh closing high on Wall Street as traders look ahead to the release of new inflation data from US. Shares of Oracle skyrocketed 26% in extended trade following company's upbeat cloud forecast, even as the latest round of earnings fell short of expectations. Meanwhile, JP Morgan's top boss, Jamie Dimon, has said that the US economy is slowing down on account of that soft jobs report from the last week. Traders in Asia Pacific, in the meanwhile, are making sense of that inflation print from China amid persistent deflation woes. Consumer prices in mainland China fell 0.4% year-over-year in the month of August, while the producer price index was down 2.9% YOY. It's green, though, across Asia, Hang Seng leading with waves of gains over a percentage point. Back home, the Nifty witnessing a rally fueled by massive short covering. A sixth day of gains for the index, inching close to those 25,000 marks. The big headline overnight, of course, was for the world of geopolitics, where Israel has carried out a strike on Hamas leadership in Qatari capital of Doha. However, Hamas claims that its leadership survived the attack. The attack has, in fact, drawn widespread global condemnation. In a response, the Trump administration has criticized the attack. Qatar, remember, has been the home of exiled leaders of Hamas, but has also served as mediator in talks between Palestinian group and Israel for years. Qatar has condemned the attack, calling it a criminal assault and a blatant violation of international laws. Meanwhile, a White House official has confirmed that Israel had informed the U.S. about the attack in advance. Here's what the White House press secretary Caroline Leavitt said to the media. Let's listen in.
Unilaterally bombing inside Qatar, a sovereign nation and close ally of the United States that is working very hard and bravely taking risks with us to broker peace, does not advance Israel or America's goals. However, eliminating Hamas, who have profited off the misery of those living in Gaza, is a worthy goal. President Trump immediately directed Special Envoy Witkoff to inform the Qataris of the impending attack, which he did. The president views Qatar as a strong ally and friend of the United States and feels very badly about the location of this attack.
And following Israel's attack in Doha, the prices of crude oil prices rose as well. Iran, the UAE, Turkey and Saudi Arabia, de facto leader of the OPEC Plus group of oil exporters, were among countries that condemned that attack. In Qatar, oil traders also turned their attention to that sharp build-up in U.S. crude inventories, a third straight week, by the way, and that perhaps could cap too much gains into the markets there. Meanwhile, the U.S. President Donald Trump seems to have softened his stance towards India. In a post on Truth Social, he wrote that, and I quote, "Pleased to announce that India and the United States of America are continuing negotiations to address the trade barriers between our two nations." Additionally, Trump said that he is looking forward to talking to his good friend PM Modi in upcoming weeks. Responding to Trump's posts and expressing confidence over India-US relations, Prime Minister Modi wrote, and I quote, "India and the US are close friends and natural partners. I'm confident our trade negotiations will pave way for unlocking the limitless potential of the India-US partnership." Now, on the flip side, CNBC International confirms that U.S. President Donald Trump told European officials that he is willing to impose sweeping new tariffs on India and China and asked the European Union to hit China and India with tariffs of up to 100% to push President Vladimir Putin to negotiating table with Ukraine, but only if EU nations do so well. Other potential measures to bring Russia's Putin to the negotiating table include further sanctions on Russia's shadow fleet of oil tankers, as well as restrictions on its bank, financial sector, and major oil companies. Joining us now is Ole Hansen. He's head of commodity strategy at Saxobank. Ole, hi, thank you so much for joining in. Well, there's just so much happening in the international markets, whether it's about macros, the U.S. Fed meeting next week, various statements that continue to come in from the U.S. president as well, the kind of impact that we've seen on crude oil prices currently. How are you reading the macro, the statements, the geopolitics, and then the crude oil prices?
Well, if you add it all into a pot and mix it up, you basically end with a price that's going close to nowhere. We're still stuck here in the higher 60s. I think the prospect for supply growth continuing to negative to cap the market, I think, is still a focus that we cannot avoid or ignore in the coming months. We just had the EIA's monthly short-term energy outlook out yesterday, and they joined the chorus of forecasters looking for a glut emerging. And that basically means that in the short term, we still have these geopolitical risks that gives a bit into the market. But I think it's not strong enough at this point to really to take prices higher. Also, as you mentioned, we are looking for rate cuts, incoming rate cuts in the US. That's not from a position of strength. That's from a position of weakness. The market we're seeing the jobs data, and that basically indicates that the economy in the US is slowing, and with that, potentially also the demand going forward.
Ole, what is your sense on prices going forward?
I think basically that we're capped here still with 70, above 70 being a tall order for any further moves higher. At the same time, we still need to see this supply glut really emerging in order to see any renewed downside pressure. So we're stuck here. Positioning, especially in WTI, is very light. We're still seeing a net short there, and that basically also means that there's not a great position in the market. So that probably has also helped the bounce we've seen recently, simply because the market's not really positioned for it. But looking at the forward curve, we are heading towards a surplus, and that basically means that the risk of sub 60 over time is probably greater than above 70.
Okay, so the crude oil prices perhaps could go below 60, very hard chance that it could be going to $70 a barrel because there is excess supplies. Also, how are you looking at gold prices now? Because all-time highs and constant all-time highs, we've done 36.50 and beyond. How are you looking at the overall markets, and what's your next target now for gold prices higher?
Well, it's a very interesting market, and it obviously still points to the fact that the world is not a great place right now. There's too many uncertainties that continues to drive investors into gold. No doubt that the threat to the Fed independence that emerged in late August was really the trigger that sent prices higher. But since then, momentum has taken over, and now we're looking for rate cuts to further underpin prices. So I think the market is still in a buy the dip mode. We just saw a $50 setback yesterday, and that was immediately met with fresh buying. So with that in mind, just looking at the technical analysis, because right now it's anyone's guess how far we can go. But just looking at the consolidation that we had between April up until recently, and the extension of that range, that basically could take us up towards 6,800. No, sorry, 3,800. So that would be my technical target on this move. But I think it's also worth noting that silver and platinum both struggling a little bit to keep up with gold this past week, and that is a clear sign that the incoming rate cuts is due to economic worries more than anything, and that basically means that the semi-industrial metals are just being left a little bit behind there, but still obviously will perform well if gold continues to move higher.
So, Ole, when you say $3,800 an ounce is incoming, what is the time period that you're looking at? And since you spoke about silver and platinum, what is your sense on prices there?
Well, the 3,008 could be before year end, because obviously now what could happen in the next 3 months is perhaps we get the rate cuts. Perhaps we get some profit taking once the cat is out of the bag, that we get that is confirmed. So maybe consolidation, but I think we could still take aim at that level before year end, because we still have a debt situation in the US, which is quite scary. We have worries about the Fed independence that I think continue to add investment demand into ETFs and into the spot market. So I can see that before year end. Silver is still one that's trades below its record high, so which is the $50. So I think that would still be a target for traders over the next 6 to 12 months. And then if you look at platinum, we just have a fresh update today from the World Platinum Investment Council. If they confirm and continue to talk about the supply deficit in the market for the third year running, then platinum will be a contender as well if gold continues to move higher. But I don't have a target on it as such.
Ole, a very quick one on the metal prices, because the base metals have continued to gain as well, even as the economic data has been on the weaker side. would you say this is to do with a longer-term inventory, supplies and demand scenario that seems to be getting baked into base metals?
That's part of it, no doubt that this whole as long as we have this AI craze, which obviously is starting to make me a little bit worried. So we remember the dot-com bubble years back. This smells a bit like this, because obviously sooner or later companies will start asking, or shareholders will start asking the questions about where's the profitability from all these investments that you put in. But we're probably not there yet. But the AI craze will continue to drive this electrification. Looking at copper in the short term, a little bit concerned that we have an overhang of supply sitting in the US after the tariff-related surge in transportation of copper to the US. That may start to find its way back to the global market, and that potentially could weigh a bit on prices. But we are seeing slowly investment interest picking up again, and I think we have seen the flow in copper, and it's still a long-term positive bet where the mining companies obviously will do well.
All right, so whether it's gold, silver, platinum, copper, barring crude, of course, where a decline is expected, but most of the metals in all segments are expected to do quite well going forward. Ole, as always, thank you so much for joining in, and thank you for your sense about the global cues and, of course, impact on the commodities. With that, we'll go for a short breather on the show. Up next, we will talk all things edible oils with Anton Gritsay of EFKO Group and Sandeep Bajoria of Sunvin Group. Stay tuned. Welcome back, and as promised, joining us now is Anton Gritsay. He's Trading Director for Vegetable Oil and Oil Meals at EFKO. And Sandeep Bajoria is a Managing Director at Sunvin Group. Gentlemen, hi, thank you so much for joining in. And sunflower clearly seems to be in discussions right now. Is the reason we have Russia and India come together on a platform here. Anton, I'll start with you first. And we've seen strong numbers come out of Russia, not just in sense of production, but exports, and especially exports to India. How have you seen growth year-on-year basis, and what is your projection going forward from here?
Good day, dear Ms. Manisha. Good day, Mr. Sandeep. Thank you for having me here, the interview. Yes, indeed. I would say Russian company EFKO has been the first and the pioneer company making direct shipments of Russian origin sun oil to Indian customers. In January 2017, the first parcel of 16,000 tons of Russian origin sun oil has been shipped to India. A couple of years later, in 2019, about 74,000 tons of Russian origin sun oil EFKO has shipped to India, and that was 30% of the total export volume from Russia. But the record volume Russia has shipped in 2024, 2 million tons of Russian origin sun oil shipped to India. And again, I have to say, our company EFKO share was about 30%, or equivalent of 700,000 metric tons. So in the course of last, I would say, 5 years, Russian sun oil export volume to India has grown substantially by 10 times. And basis 2024, India accounts 50% of total Russian sun oil export. So this is a very sustainable and very strong number so far.
Absolutely. Anton, also, what is the crop estimates, and is Russia looking at higher numbers in sense of overall crop itself?
Our crop number for the crop season 25-26 is around 18.3 million tons. We had to revise down the crop number recently after some drought conditions and heat wave that main production areas in Russia have experienced in the course of July and August. So nowadays we work with 18.3 million tons clean sunseed weight in Russia.
So from 25.2 to 18.3 million tons there. Mr. Bajoria, let me get you in the conversation as well. And as Anton is saying that India is perhaps now a 50% of the market there, what is it that India also gets in from Russia, whether it's about prices, quality, or the overall numbers?
Manisha, first of all, my hello to all the viewers, and thank you for arranging this beautiful conversation between Mr. Anton, the highest exporter of sun oil from Russia to India. We just took a delegation of 16 members to Russia last week, and we went to EFKO head office. We saw EFKO facilities there. Fantastic work they are doing. They are not only a big sunflower oil company, but they are also doing a lot of food products, and they are also in innovation, robotics, and biotechnology. So, and the company from Russia is to watch for is EFKO, no doubt about it. And Mr. Anton is the main face of company to all the exports, and to India is very well known. And this year, oil year, Mr. Anton is going to get the award of the highest exporter of sun oil to India in Globe Oil coming on 25th of September.
Okay.
Now coming to the Russian market, Manisha, while we had a productive visit, total crop, as Mr. Anton has said, looks around 18.3 million, and some yield suffering is there. However, Ukraine crop is only 13.4 million. So Russia crop will be at least 5 million higher than the Ukraine crop. And the main exporter to India for sunflower oil in coming year also will be Russia. And they are going to be our steady partners in supplying the sulfur oil too. And India imports, 3 to 3.5 million tons of sunflower oil. So we need some big supplier, and Russia is going to be our supplier number one for coming year as well. And then the next one is Ukraine, and then we have Argentina, and then we have small parcels coming from Romania, Bulgaria, Moldova, and other countries. So as far as sunflower oil is concerned, it's a premium oil, oil of choice. It is a branded packaged oil in India. There are 10 big refiners in India who mainly import about 85% of sun oil into India. And they have the very, very good quality oil, and their branding and packaging is also of A class. So sunflower oil is considered as oil of premium and choice in India. So all the customers of upper middle class and the higher class, they first prefer sunflower oil over other oils. And but I think the sunflower oil prices, the crop wasn't having some damage because of the heat wave in Europe and here. The sunflower oil prices would have traded around soy oil prices, and that would have increased the consumption here in India. But when we went in Russia, we told them, because they are producing such a big sunflower oil crop, and they are producing about 6.5 million ton of soybean oil. They are soy seed. They are producing about 4.5 to 5 million ton of rapeseed. Total 30 million ton crop they have.
Okay.
So we have told them, if you increase your crop every year by 3 to 5 million tons and go to 50 million tons in next 5, 6 years, we can underwrite from India that we will buy everything, every oil, whatever you produce, we are here to consume. India is
All right.
world largest importer of veg oil, buying 16.5 million tons. So,
Oh, well, absolutely. And
addition,
this relationship and trade, I'm assuming, is quite fructifying as I see both of you together on the screen. One question that I have to ask both of you really is about the price direction from here on, because when it comes to edible oils, overall, there's a lot of conversation about biofuel mandates on one side. A lot of countries doing that. And that in turn has impacted the overall category within the edible oil as a space. So, Anton, first to you then, what is your sense on where the sunflower prices could be headed from here?
Well, it's only the beginning of the season and the crop campaign, and maybe it's a little bit too early to make a long-range forecast, but probably we hope that the veg oil market in the course of this season will have some support, taking into consideration two main factors. Correct, there is some increasing demand for soybean oil in the US, and some experts say that probably US in this season, 25-26, may be out of the exporting soybean oil and will be only consuming domestically. And another factor is the increasing B50 mandate in Indonesia as from the beginning 2026. That combining will also reduce some veg oil supply to food purposes instead of non-food purposes. And we believe this may be a factor to support veg oil prices in the months ahead.
Oh, well, absolutely. There are so many global cues that would perhaps continue to support the vegetable oil as prices. Mr. Bajoria, what is your sense, a range that you are willing to put out when it comes to sun oil?
Yeah, sun oil right now for the month of September and October has become pretty technical because arrivals are slow in Russia, and farmer is not selling that easily. And they don't have any crush margins, which we understand when we visited there. So I believe the sun oil prices for October shipment should be between the range of 1250 to 1275. And I believe November will have find some pressure. November prices can come down to between 1225 to 1250. And then December shipment, January, February shipment, possibly then we can see below 1225. That is the Black Sea cargo. But sun oil will definitely have a premium, much premium of at least $50 over soybean oil because of the global crop, which was expected to be 56 million ton of sunseed, is going to be somewhere around 52 million tons, 52.5 million tons. So that is going to create that premium. And but at $50 premium to soya seed, soya oil, sun oil is consumed easily. There is no problem. If there is a premium of $100 and above, then there is a slight problem and it kills the demand. to some extent. But I think $50 premium shall remain definitely this coming year.
Anton, this is a time that we talk about tariffs and duties, etc. We do understand, pardon me, that there was a floating duty that was until 31st of August. Is Russia looking at some relief yet again going forward?
Ms. Manisha, no. In the course of August, Russian government has lifted and put moratorium on the implementation sun oil and sun meal export duties. But as from September 1st, both duties came in force. And so far, Russian government believes implementing the export taxes is a measure as an instrument of regulation domestic food security, not limit export, but more domestic food security.
And Mr. Bajoria, when it comes to India, there are rumors yet again or some duties being put out. How are you reading into that?
Manisha, personally, I don't think so. There should be any change in duty structure in India because these levels are very perfectly well balanced for the consumer and the farmer. Although there is a demand from some to increase the duty, demand from some to reduce the duty, but I think government do very well by just keeping the same duty going ahead. Tinkering with duty every time, every few months around is not good trade practice, and it's not good for the government to tinker so much. Otherwise, trade gets a lot of dislocations. So I believe, and personally, I feel the duty shall not change. It shall remain same for next few months.
One final question I'm going to squeeze in, and this one is to you, Anton. And I'm assuming, as Mr. Bajoria said, that perhaps you're visiting India for Global for that award, and we hope to see you in India at that point in time. But as we move ahead in this one, what is your sense on the tariffs itself? Is that impacting trade at all right now?
Well, we are doing business in the food market, and I would say we feel less impact on the food market because normally food markets, food products, products for human consumption are not normally subject to any restrictions, bans, etc. So we feel a little bit more comfortable than other traders for metals or for crude oils, etc. So, but of course, we have got some issues with payments, with freight, with insurance. But so far, we have been trying to overcome these issues and keep our regular export flow from Russia to India and from EFKO company as a leading sun oil exporting company from Russia to Indian customers.
All right, that's good to know. At least agriculture in that sense is not suffering at this point in time. But Anton, Mr. Bajoria, thank you so much for joining in. This has been a great conversation, and we hope to see you guys soon. We're going to dine off. But with that, that's all the time that we have on this edition of Big C. Thank you for watching.